Good morning, investors and traders. In today's segment, we'll be talking about oil and gold. Both are oversold. Why they are oversold, that is what we'll be discussing in this particular video. And if this is an opportunity, remember, if you haven't subscribed to our channel, please do so. Disclaimer before we do anything else is right in front of you. If you have any further questions, feel free to ask us. Very briefly about myself, I come with a wealth of 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America, currently providing services as a chief analyst to EverTrade. Now, the big question, why have we seen this big sell-off in oil prices? And of course, the chart which is right in front of you is a crude oil chart, and then this is the sell-off that we are very much talking about right over here. Why is this sell-off? Yes, it is true that after the initial sell-off over here, we did see a little bit of a bounce, but now we do see this big sell-off once again. Why are we seeing this sell-off? What is the reason behind it? That is what we are really going to discuss. Well, the reason behind the current sell-off, especially this particular one, is not much different to this one. This current sell-off, the big sell-off that we are seeing, is mainly because of the intense increase in Delta cases around the globe, especially over in Asia. And secondly, there are concerns among investors and traders that perhaps demand may be cooling off when it comes to oil prices over in China. Because remember, China is a very important country when it comes to consumption of oil. And thirdly, we do know that OPEC is increasing its oil supply. So traders are worried about that demand may have adverse influence. Now, in the light of that, the crude inventory data, which will be released tomorrow, is going to be immensely important for oil prices. So that, from the fundamental perspective, why this sell-off is really occurring. Now, is this an opportunity in terms of oil prices? Well, the answer to that one comes from here, from this particular indicator, which is your relative strength index. Anything near 70 represents that the prices are overbought and they are likely to move to the downside. Anything near 30 represents that prices are oversold and they are likely to move to the upside. Now, if we look at the price action, we can see that yes, the prices are actually oversold because the RSI is near 30. We are likely to see a bit of a bounce back, and the price action is confirming that as well, because today, after the intense sell-off, we are already above the yesterday's high. As you can see right over here, the price has crossed above the high of yesterday, which is very, very positive. So this could be a great opportunity for investors to get involved. Where can you put your stop losses under the current circumstances? There are two places. You could do it under the lows of yesterday, which would be a safer way to do that, or you could do that under the lows of today, which is highly likely to be triggered, but nonetheless, it is still a valid stop if you wanted to put at it. But the safer stop would be under the lows of yesterday. In terms of target, one should be or could be looking at as the first target right over here, which is your 100-day simple moving average. This is your 50 and this is your 200-day simple moving average. So this could be your first sort of your target. Now, in terms of a risk to reward, this is your risk right over here, and in terms of a reward, this is the reward that we are looking over here. So just slightly more than 1-to-1 risk to reward ratio, but an important level of resistance or the profit taking is more likely going to be in around this, the highs of this particular candle. So in other words, the really the risk to reward ratio that one should be looking at is at least the highs of this one, which makes it more than 2 to 1 in that particular price point. So let me draw those price levels once again. So in terms of your risk to reward ratio, the stop losses could be just below the lows of this one. And if that is your risk, then this, if this is your risk right over here, then your reward under the current circumstances is really going to be at least going to be near here, the highs of this one, or you could be targeting around that 50-day simple moving average. So your risk to reward ratio under those circumstances is really up to here, which is again more than 1 to 1, or at least over here, which really kind of makes that 2 to 1 risk to reward ratio, meaning you are risking this much in order to gain that much. So that is what is going on with oil prices when it comes to crude oil prices. Now, what about gold? Because gold prices have also seen massive, intense sell-off, and this sell-off, as you can see from the price action, is very much based on one particular fundamental, and that is that this sell-off will occurred mainly because the strong US non-farm payroll data, which came on Friday, that really took the wind out of this rally and pushed the prices right down to this particular price level, that double bottom which kind of formed. Earlier in the previous analysis, we did talk about the prices coming into this area of support, but that support area didn't really hold at all. Prices went all the way to here. Now, if we look at the price action at the current level, now what we really see is that the prices are moving higher. Now, in terms of the opportunity, what investors and traders can do really is that you could put your stop losses in terms of just the lows of this particular candle, and you may want it to continue in terms of a reward is right around that 50-day simple moving average. So what I'm going to do is I'm actually going to just move a little bit of our risk to reward ratio. So first of all, we will delete this particular line, and we will delete this line as well because they are no longer valid. And for our resistance level, we should be really looking at the previous support over here becomes the resistance now. So that would be your minimum level of resistance that we would be very much looking at. So again, to focus on the current price level, what one could be looking at is placing the stop losses below the lows of this particular candle over here, and under those circumstances your risk to reward becomes your risk if this much, and in terms of your reward is your this much. So really you should be targeting that 1793 to 1803 sort of a price level. But if the price breaks below that, then the chances are that if the price breaks below that, then the price may not stop over here. We may actually see this further sell-off from here to the downside. So we will continue to monitor them and then update you with more information as the price action forms new price action. That's all for now. See you guys next time.